How long does it actually take to get money from a hard money lender? Okay guys, this is talked about quite frequently. How long does it take to get money from a hard money lender? How does that compare to a conventional lender? I'm gonna answer those questions right now. All right, so as a hard money lender, I can close fast. And I mean like really fast. A couple of days, 2-3 days is typically what it would take for me to make everything happen to close on a deal. But that's not how long it typically takes to make a loan happen. And the reason is we're waiting for everything. We're waiting for everyone. If we had everything in a file, we could have it closed in a couple of days. 3 days would be ideal, probably could do it a little sooner. The problem is we're typically waiting for everything. We can't do all our work until we have that full file. Meaning we got to draw docs and do all those types of things. We've got to review the title and the title insurance. Let's talk about a few things that slow down hard money lenders and what you can do about it. One of the first things that's going to need to happen is you're going to need to do some type of a loan application. This is typically pretty simple. It's typically not like when you're going to get a loan for a bank or any of that type of stuff, but there is some type of loan application. Then there's going to be some disclosures. Some disclosures, hey, we can pull your credit, we can look your background, that type of stuff. Now, speaking on that, most hard money lenders are going to want to pull your credit. And the reason is they want to make sure you don't have bankruptcies. They want to make sure you don't have judgments. They want to make sure you don't have collections, those types of things. Even if they're not worried about credit, they do want to make sure that they're dealing with somebody that's responsible and just didn't file for bankruptcy last week. Okay. So that's the next thing that's going to happen. The other thing that you're going to need is you're going to need a termite report. Okay, termite reports are fairly inexpensive. It's different based upon what area of the country you're actually in, but that's going to take a couple of days to get it, and you're going to have to pay for that. Okay, so that's something that they're going to be needing as a termite report. Next thing that we're going to need is hazard insurance. If this property burns down, we need to make sure as a lender we're getting covered for that. So that actually has to be hazard insurance, and it has to have our loss and payee information, which we'll send over. Most people don't know who they're going to use for hazard insurance. And talking on hazard insurance, one of the big things people don't understand is vacant dwelling coverage. I'll tell you, I learned this the hard way. It was a winter evening right before Christmas, actually. This has been several years ago. And we had a property that we just finished the fix-ups with. It was in great condition. And I was stopping by there right before I was leaving town. Hadn't sold it yet, had it on the market, and I heard some water running. And I went down in the basement, and there was about 6 inches to a foot of water. Where was it coming from? It was coming from the kitchen sink leaking down and did a ton of destruction. I got it stopped, turned the water off, started trying to clean that stuff up, bring in vacuums, everything else. But I called my insurance broker and I said, hey, we've got a problem. I need some money. We got to do this claim. He's like, okay, no problem. Let me submit everything. Well, he submitted everything, and a couple of weeks later, he called me. He said, so was anybody living in the home? No. That's a problem because we got you a rental policy, and that rental policy only allows that property to be vacant for a certain period of time. If the property hasn't been occupied within a certain time, it is a higher risk for the insurance company, because the idea is if somebody's living in a house, it's not going to get a foot of water in the basement because somebody's going to be there to hopefully stop that. And if not right away, it's going to be sooner than something where no one lives there. Okay, so that point on, I realized what this vacant dwelling policy actually means. And a vacant dwelling policy is more expensive because there is more risk to the insurance company. You've got to make sure you get a vacant dwelling policy. That's what it is, and it's got to have your lender's information on that. So if you take 3 weeks to get a hazard insurance, it's going to take 3 weeks and 3 days to close the loan. If you take 2 weeks to get a termite report, it's going to take 2 weeks. Like I say, we can close really, really fast. It's usually 2 or 3 days, but we need to have these things to actually make it happen. And that leads me to my next point. General contractors. A hard money lender is going to want to bid. If you're doing any type of rehab, they're going to want to bid because they're going to want to look over that and say, is this reasonable? Will this do it all? Was this enough money? Those types of things. In addition to that, they're going to want to make sure that general contractor is licensed and insured. So yes, can you use someone unlicensed to do some work on a property? You probably could. But if you're doing a fix and flip and you're going to be taking money from a hard money lender, they're probably not going to let you, because here's the thing. They don't want to take the liability on of having that work not get done. And they don't want to take the liability on if something happened because the work was done in a shoddy manner. So hard money lenders are going to say, we want a licensed and insured general contractor. Now, they're going to want to bid. They're going to want license, and they're going to want insurance. Okay, that's the next thing we're going to be doing here. What's next? We need title reports. So from title, we're going to need several things. We need a PR, preliminary title report. We're going to need wiring instructions. We're going to need what's called a closing protection letter. And we are going to need, I don't know, we're going to need a few things here. Okay. Now, typically you don't have to worry about this. We contact the title company and request this information. But here yet again, until we get that information, we can't do the work we need to do to actually make the loan happen, put the loan documents to. So if the title company takes a week to get us stuff, it's going to take a week and 3 days to close as long as we have everything. We have to have a complete file. We have to have all this stuff so we can do our work and we can put the docs together. We can get the legal stuff done and then we can go move to closing. But if we don't have these things, we can't sign off on it, which means it takes longer to make a closing happen. Closings can happen really fast if you're prepared and if you're on top of things and making sure you're getting everything that's necessary. Now, one of the things that takes a while is sometimes it takes a while for us to get the name and phone number of the title company. In addition to that, with the hazard insurance, we like to order that to make sure they have all the information they need to do that properly. We just need to know who you'd like to order it from. Now, if you want us to make these orders with somebody we've worked with before, we're happy to do that. We just need to know, hey, go ahead and just make the orders. Or if you have somebody specific you want to work with, we just need their names as fast as possible so we can get in touch with them. Okay. The other thing that happens with all of these before we even do the loan application is the property has to get valued. Now, every hard money lender is going to do this a little bit differently. Some hard money lenders are going to drive by. Some hard money lenders are just going to do it on computer. Some hard money lenders are going to get an appraisal. Some are going to do a hybrid approach. Some may call a real estate agent. There's a variety of different ways, but somehow this property has to get valued in a way that the hard money lender is happy with that. And in most cases with value, they actually want pictures. Even if they're not making it to the inside, which lots of times they are, they're going to want pictures of the property so that they know the condition before it ever started and have that. Next thing that we're talking about here is letter of intent, or also known as an LOI. An LOI basically spells out the terms that the lender is offering and the borrower is saying, that sounds good to me. It's really a meeting of the minds to make sure there hasn't been anything lost in translation. It's deducing the conversations down to paper to make sure everybody's on the same page. Well, what does that look like? Well, it's going to have loan term, how long the loan's for. It's going to talk about the interest rate. It's going to talk about the loan amount. It's going to talk about closing costs. It's going to talk about any other fees that would be necessary to make this transaction actually happen. And that's one of the first things that happens is that property gets valued, LOI gets signed, loan application gets done. And this is a little bit of a reverse order. Most people are like, I need to do the loan application before I do these things. Honestly, the loan application is more of a formality than it is something that needs to be done in advance. Next thing we want to talk about here is driver's licenses. You've got to have a copy of a driver's license or government ID. It's going to be necessary for the hard money lender to go ahead and do the loan documents, and they are going to need that before they can actually do the loan doc. Some of these disclosures we were talking about earlier, one of these disclosures is a non-owner occupied disclosure, which basically says, hey, I don't live in this property. I am doing this for a business purpose and I'm trying to make money with it. That's typically one of the disclosures. The other disclosure is that credit and background, as we talked about. There's typically another disclosure if you are doing rehab, whether it's a BRRRR deal or whether it's a deal where you are just trying to fix it up and resell the property. There's typically going to be some type of a rehab disclosure. That rehab disclosure is going to talk about how funds are transferred, how draws happen, and it's going to spell all those things out. So there's typically going to be something around that. Next thing that we're going to need is a purchase contract. That needs to be fully executed. Buyer and seller have both signed it. They're on the same page. Going to need a copy of that. Now, we talked about this disclosures and we talked about credit. Lenders more than likely going to pull your credit. Even though a hard money lender is not credit based, they want to make sure you're not dealing with judgments, collections, charge-offs. Those types of things is what they're looking for, not really caring about the score. So a traditional lender is looking for debt to income, a certain credit score, and those types of things. A hard money lender is looking at the asset. However, if you have problems like judgments, those could attach or could hurt the asset in some way. That's why hard money lenders are going to say, we want to see that. And that's going to come from a credit report. The other thing that most hard money lenders are going to do is a background check. Now, they want to make sure there's not criminal activity, or if there is, it was a long time ago and it wasn't anything major. Like if you've been defrauding a bank or forgery or any of those things, they call it crimes of moral turpitude. You're not going to get a loan from most hard money lenders. They're not going to want to do that. Now, hopefully that's not most of you that are listening to this, but if you've had something happen and it happened in the past, I was talking to a borrower the other day, he got pulled over, he got a DUI, it was 10 years ago, he hasn't had anything since, turned his life around, hasn't had any problems. He's saying, is that going to be an issue? No, it's not going to be an issue. Because one of the things I look at as a lender is I'm saying, you know what? If somebody has a problem, fine. What I want to see is the distance in between problems. And because I think if somebody's got a drinking problem and gets a DUI, and it's been 10 years and they haven't gotten another one, pretty good chance they've got some things under control. But if I see a background report where I see a DUI every 6 months for the last 10 years, and it's been 3 months since he had his last one, I'm concerned about that. Okay, we talked a little bit about hazard insurance. The other thing that we're gonna need for the title company is errors and omissions, called E&O, errors and omissions insurance. Now again, we'll get this, we can help out with all these things, but we need errors and omissions insurance from the title policy or from the title company. Next thing that we're going to need is what's called corporate docs. So if you have an LLC or article of incorporation, we are going to need a certificate of existence. We typically find that. We're going to need operating agreements, and we're going to need articles of organization. If it's not in the name of an LLC, no problem. We'll take care of that if that's necessary and can work with you on it. But if you have the purchase contract in the name of an LLC, we're going to need those types of things. Also, if it's a refinance, we'll need a copy of the payoff, meaning you're paying off a loan. We're paying off a loan as part of it. We'll need a copy of the payoff, and we'll have to call and verify that payoff. One of the other things that we're going to be getting from title is what's called a closing protection letter. We talked about that just a little bit. But what a closing protection letter is, it protects the lender if I send the funds and those funds don't make it to the closing and it getting recorded, then I'm protected. So what it's saying is the underwriter is going to be protecting me for the transfer of the funds up until the time it actually closes and it gets dispersed. So let's just say, for example, the title company took that money and ran and did not record it, which I have had happen to me before, just once. Then the underwriter is responsible for paying the lender back, okay? And the one that we had a problem with, we didn't even know it didn't record. We were told it was recorded, we got paperwork, we got all that stuff. It came time for us to do a foreclosure. We started doing a foreclosure, and they said, you don't even have a loan on this property. And we're like, yes, we do. We have all the paperwork, it's notarized, we have everything. And that's when the closing protection letter kicked in, and boy, were we glad that we had it. One of the things we also do is we're gonna verify that closing protection letter. That's one of the things that we're going to need to do to make sure it's actually valid. Next thing we're going to be looking at is the 24-month chain of title. What we're basically saying is if we go back 2 years, we want to know who's owned this property. Now, if somebody's wholesaling it or it's been wholesaled, we're going to want to know that information. Now, does that mean a hard money lender isn't going to lend on the property? No, they just want to know. If I know the property sold 6 weeks ago, I want to know how much it's sold for and what it's selling for now and why it is worth more money than it was 6 weeks ago. So that's one of the things that we're going to be looking at and wanting to know. I spoke a little bit about wiring instructions from the title company. We're going to call and verify those. With all the wire fraud and things that are happening, we're going to be verifying that those wire instructions are accurate. The other thing that we're going to need from the title company is what's called a settlement statement. A settlement statement breaks down all of the fees and costs and everything else associated with it. That's one of the things that the borrower is going to be signing when they actually go to the title company. That's something that we're going to need to have before we actually do a closing. Then, based upon that, we just need to get some documents together. We've got to get some loan documents together, and then we can get those loan documents over to the closing attorney of the title company to actually sign. Once it signs, we can then verify and fund that transaction. So that's really what we're looking at here. So there's really not a lot of stuff. If you think about this, there's really not. If you think of a traditional loan, you're going to have W-2s and 1099s, debt to income, employment letters, all that type of stuff. We don't need any of that, right? We need very basic things. Loan app, disclosures. Loan app, you can do that on your cell phone. You know, we do that through an EcoSign or Right Signature. Disclosures, you can do that right on your cell phone. A termite report, you can call and have somebody come out there and do that. Hazard insurance, you can call and get a vacant dwelling, or just give us the phone numbers, give your hard money lender the phone numbers, let them call and send their correct information over. Now, if the hazard insurance comes back wrong and doesn't have the correct information on the loss and payee, we have to wait and get it again. And we can't close until we get this again. So if we have to get your hazard insurance 3 different times from your company, that's a problem because it's going to delay the closing. Now, does that have anything to do with the hard money lender and how long it takes me to close a loan? Absolutely not. I can't close a loan until I have everything that's required. Once I have everything that's required, 2 to 3 days later, I can close that loan. But if the hazard insurance guy doesn't get me what I need, which I send to him and say, hey, this is exactly what I need, I send it in writing. If he screws up on that, I've got to get it, and I've got to get it as fast as possible so we can have this closing happen. General contractors. Lots of times, general contractors won't get us their license or insurance. That can delay closing. That can delay us doing it. So if you have that stuff up front, it's going to help you a lot. Title company. If the title company can't get us the stuff in a timely manner, we're at their mercy. We cannot close without a title report. We cannot close without closing protection letter. We cannot close without errors and omissions. Like, we have to have all those things. And as we talked about earlier, valuing the property should have been done, and then you sign the LOI, and that's when you kind of get into this loan applications. Copy of purchase contract, then we pull the credit and we pull the background. So let's look at this, guys. There may be a few other things on a deal by deal case, but if you really look at this, let's talk about all these. Okay, the loan application is something that only you can do. The LOI is only something you can do. Getting us a copy of the purchase contract, you or your agent, if there's an agent, could get it to us. The credit and background, I'm going to change colors here. The credit and background, let's get a pretty blue color here. This is you. This is the borrower. Okay, this is the lender. Okay, your hard money lender can do the credit, but they can't do it until they get the disclosures. They can do the background. They can't do it until they get disclosures. Signing disclosures, that's something only the borrower can do. The termite report, it could be done by either, you know what I mean? So it's something that could be done by either, but the borrower is going to have to pay for it. So it's typically better for the borrower just to handle that. Now, when it comes to hazard insurance, we can order that as a lender. We can order that hazard insurance, but the problem is you need to tell us who you want to use, or that we just use somebody. So we need to know who. So the borrower will be responsible for who. Now, the general contractors, same thing. Who? We can call and we can ask for the insurance and the license and all that type of stuff as a lender, but we need to know who you want to use as a general contractor. So that's something that as a borrower, you'll be responsible for. The same thing goes with title. We need to know who you want to use, but as a lender, we will take care of this portion of it. And we take care of making sure the values are actually done on the property. So you can see here, the things that I need from you aren't a ton as a borrower. I need the loan applications, I need the disclosures, I need a termite inspection, I need to know who you want for hazard insurance, I need to know who your general contractor is, I need you to sign the LOI, I need a purchase contract. Oh, I forgot one, guys, I forgot we talked about it, but I need your driver's license or government ID. Okay, I'm going to need your license, and that's something you're going to have to just send me a picture of. Like we're going to need that to actually do docs, but that's what I need to close. I cannot close until we have these. I can't do my work and start putting the docs together, verify all this stuff. Like I said, I can do that in 2 or 3 days. I could maybe even do it sooner, but I can't do that until I have all these things. So if somebody takes a long time to get me stuff, it's gonna bounce my time frame back. I don't have a choice in that because it's gonna take me 2 or 3 days after I get a full and complete file. So if you take a week to get me loan applications, that's going to delay our closing a week potentially. If you take us a week to get termite or 2 weeks to get termite, that could delay it. If the title company takes too long to get us the stuff, that's going to delay closing. If the hazard insurance company takes too long, that's going to delay closing. So what I'm trying to really point out to you guys is the speed of a closing for a hard money lender really isn't in the hands of the hard money lender. It's in the hands of the service providers, of everybody that's going to be getting this information and these documents that are required, which in the most cases is something you are choosing. Now I'll give you a little pro tip. It might be a good idea to talk to your hard money lender and say, who's a good title company? Who's a good hazard insurance company? Who's good for termites? And so you know you're working with somebody that's done it before, somebody that's worked with a hard money lender, and somebody that can move quickly. That could be something that could help you out, is asking for some referrals. In addition to that, we cannot close until we have a full file. Then we can draw docs, then we can send them the title, and then we can wire funds. So when it comes down to a closing, I can close fast. I can close really fast. I can close in 2 or 3 days, once I get everything. But I'm relying on a lot of people to get me the information that we need, and we'll follow up and we'll do everything we can to do that. And you'll want to follow up as well. But in the end, I am at the mercy of all these other vendors that are getting this information before I can actually do my work on the file. So as a hard money lender, we're following up with everybody as much as possible. But in the end, if we don't get it from them, we have to find somebody else to do it and then continue with the process. And that's what takes a long time. On average, let's talk about this. Well, I would say the median closing time is somewhere between 8 business days and maybe 15 business days, so we are talking business days here. So 8 business days to maybe 15 business days is kind of the median. The median means the quickest ones we throw out and the longest ones we throw out. Somewhere in the median, it's the average of those middles is basically what we're saying here. And so you're somewhere between 8 and 15 business days. If I was doing it, I would plan on about 15 business days if it's your first deal. If it's a deal, if you've done a deal with this hard money lender before, it might not take as long because you may have the stuff, or the hard money lender may have stuff to make it go faster for you. So this is what I can say. When it comes to loan closing deadlines, most of the time, the hard money lender is going to be waiting on everyone else. You're rarely going to be waiting on the hard money lender if they're a good hard money lender, because the work they have to do only takes a couple of days of verifying all the information we've been talking about, drawing loan docs, getting it all over the title company, and then sending funds. If you would like to know how I repeatedly find motivated sellers for fix and flips, check out this video. I'm going to be covering the first steps in getting into real estate investing. If you can find sellers, even if you're not an investor yet, and I'm going to show you how you can target the right properties with the right owners over and over again. You're going to want to check out this video and make it a very profitable day.